Alrighty. Sorry. Happy Friday to the four people who watch this. We are going through 8 deals that are more of like a roundup from this past week. And I'm really surprised that these ones in particular haven't traded yet. So I'm going to go ahead and share my screen and show you through these 8 different examples, why I think they're good, the bull and bear case for each one, and just see because most of the time when I post one of these opportunities, they tend to sell. Like, for example, in the last week, I think we put 6 or 7 of these under contract, and I only send out maybe 3 or 4 each day. But there's some of them that I'm surprised have still been sitting on the market. So let's start off with this today's distribution. This is the Texas deal list. It goes out Monday to Friday, usually right around 7 a.m. And it'll always include 3 or 4 options for cash flowing real estate in appreciating markets across the entire state of Texas. Usually they're going to be tenant occupied, totally turnkey, good markets with highly rated schools, low crime rates, no vacancy. So they're already filled up right from day one, and cash flow positive based on the current financials. That's the goal. That's the standard that we're shooting for on every deal that we send out. Dallas proper. So we get a lot of opportunities in the tertiary markets around Dallas. It's very rare where you get something that's more like urban core and it's still cash flow positive. This one already has both units occupied. Each unit is pulling in $2,850 a month. So the $5,700 isn't a projection. This is the actual revenue that it's pulling in, and it's a 2024 build. So you have very little capex risk with these more recent construction assets. You have very little vacancy risk because you have 2 long-term tenants already in place. You've got a great tenant base being so close to downtown Dallas, and I really believe in the overall appreciation potential of the Dallas market. So I think this deal is exceptional. And when I look at the analytics from the emails that go out, I know this deal is exceptional because it had 152 people click on it yesterday. And usually most deals, even ones that sell, will get anywhere from 30 to 40 clicks. So this one drew a ton of attention, but it hasn't sold yet. So I do think this is a great opportunity. Going on to number 2, a Fort Worth duplex with 3950 in rent already being pulled in. So this one on Daniel Street in Fort Worth, another DFW opportunity, has already assessed. There's a difference between assessed and appraised values. The appraised value is done by an independent third party. The assessed value is what the county deems your tax basis to be on that property. So this one has an assessed value of $481,000. Typically, though, your assessed value is going to be relatively close to fair market value. There's obvious outliers. But this one is going to be relatively close. And even if you look at the comparable sales for this property, this one is pretty close to comps. So I do think that you're walking into a really nice equity position on this one. I do think it was actually mislisted. I think this is listed as either a townhome or it's listed as maybe condos or single family house. There's a reason this didn't populate the multifamily search. I can't remember the exact MLS settings, but I do know that's probably the reason this hasn't moved. And just because it hasn't moved in 35 days doesn't mean it's not a good deal. I think that this has an opportunity to sell for $425,000, gives you a really strong walk-in equity position, especially with that assessed value at 41. Likely fair market value, if you do all of the comps, is going to be something in the realm of 470, 475. But still, walk-in equity. Similar to that previous property, you have both side, or one side is already leased for $1,950, leaving the other side open for a house hacker to go in and occupy. If you're familiar with house hacking, it's where you're going to live in one unit, rent out the other. The other unit is going to help offset your housing expense, and it allows you to enter the real estate market with relatively low down payments. And most of the time, your out-of-pocket monthly housing expense is going to be lower than if you were renting. So now you get the benefit of the experience of owning real estate. You get the appreciation potential, plus you get to reduce your housing expense. It's a great entry into the real estate world, this whole house hack idea. So this duplex on Daniel, 2022 build. We love recent construction because it reduces near-term CapEx exposure. That's a phenomenal way to get started in the market. Or if you're an overseas or an out of state investor, focusing on newer construction inventory is going to really eliminate those nickel and dime expenses that come in over time. I love the entry at 425. I'm less excited at 450,000. Also, like I think that'll really start to compress your cash on cash and cap rates. So I think if this one was to land anywhere between 425 to $435,000, you have one tenant already in place at 1950. You have the walk-in equity position. You have the more recent construction. Awesome opportunity. And this one, similar when you look at the analytics, also had over 100 clicks in the last day and a half or so, when average is between 30 and 40. So this one is drawing a lot of attention from our investor base. It just hasn't moved yet for whatever reason. So that's a really solid opportunity. Number three that I really like, this Garland quad. These Wimbledon quads are really interesting because they are very rare to hit the market. They almost always hit the market at $675,000. I have the email posted at 625, but they always post at 675, and they always end up selling between 6 to 625. The market hasn't confirmed that 675 value yet, even though everybody keeps listing it there. Maybe it's a strategy I'm missing. I don't know. But when you look at all the sale comps, well, it's interesting that nothing in this market is ever withdrawn. In the last 2 years, none of these quads have either withdrawn or expired. So they've all posted. I think there's about 8 of them have posted and have sold. They almost always post at 675, and they almost always sell somewhere between 585 and $625,000, depending on finish quality, the asset quality, how well it's been maintained, as well as the current in-place rents. This one has rents in place. I think the average is $1,350 a door. Yeah, $5,400 in gross income being collected. So if you were to go ahead and put in an offer, I would absolutely start at 625. I do think there's reason to justify something in the realm of $650,000, especially if you think the last 2 years we've been hitting more of a trough in the market, and now we're heading more into an upswing. And if the seller wasn't willing to go ahead and accept where all the others have sold at 625, if they really had their feet in the sand and they weren't going to move, I would be comfortable going up to 650, not 675. It will not sell at that number. Don't send an offer at 675 for this. It will not sell. Or if you do end up buying it at that number, you're looking at holding it for 7 years before you're able to break even when you sell it. So I don't think anything above 650 makes sense. But 625 to $650,000 with the in-place income already in place, I think is a great opportunity. It's also interesting that there's a pair. So this seller owns 2 of the same quadplexes. The quadplexes in DFW. So Garland, it's actually a pretty interesting market because it's so close to downtown Dallas, and you have that North Dallas upward lift on positive pressure on values that I think is going to splash over into the Garland region just because of proximity to downtown. White Rock Lake. I think you've got a lot of opportunity here. I think it's a really well-maintained asset. I think it's got limited vacancy risk. Obviously, you look at the last 10 years of leasing history for these quads, they always fill quickly. So the vacancy rate of any of the deals on this list is going to be lowest in this particular asset. So I do think this is a great one. If you can get the seller to agree to something between 625 to 650, ideally 625, I think is a great opportunity. And we haven't seen any offers go through on this one yet, but I do think it'll ultimately sell like all the other quads in this area for that $625,000 number. Now we have a little bit of a roundup. This new Caney 8 unit, I posted this thing assuming it was going to sell within like a couple of hours, and it didn't. It has just sat. So this thing is really, really cool. It's an 8 unit, fully occupied. This has 7 of the tenants. We looked through the rent rolls yesterday. I got them from the seller. 7 of the tenants are paying $1,400. One of the tenants is at $1,500. Many of them are very comfortable with renewing at that $1,500 number, and they're all on month-to-month leases preparing for the sale. That was done on purpose, just in case an investor came in and said, "Hey, the market rate says we can support up to $1,600. You're currently at $1,400. Why don't we do a modest price increase to $1,500 and bring this up to fair market value?" That's kind of the logic and the reasoning here. But this is a 2019 built, very easy to maintain, 8-unit complex. If you're looking to get into commercial real estate, if you're looking to level up from your duplexes and quads and get into your first commercial play, this is as clean as it gets. You have the full rent roll. You have a property that was already assessed. Again, assessed value is different than appraised value, but the assessed value is 1.45 million. And this thing was already listed at 1.4, had been under contract, fell out of contract, came back on market, failed to sell, multiple price reductions. Now it's all the way down to 1.15 million. So it's far below assessed value, fully occupied, 2019 construction. I think this is a great opportunity for somebody to level up from their duplexes and quads and get into their first commercial play. It's low risk in terms of asset quality or like ongoing repairs that are going to be needed, due to how recently it was built. Great location in New Caney. It's a Houston suburb. Very low vacancy. Obviously, it's 100% occupied, and it's cash flow positive right from day one. So this opportunity, I love, love, love for an investor looking to do that next level above. Maybe they've done a duplex and a single family home and a quad. Now they're looking to take it one step further. This is the one to do. Next opportunity is this short-term rental. I've posted this twice now. Each time I fully expect for it to sell. It's another one of these ones that has really great analytics from the email list. It gets tons of engagement, but an offer just hasn't gone out yet. Now we do have a bunch of showings. Like we've got showings all this weekend on it. I think we've got 6 this weekend, and then another one on Monday before the next guest checks into this house. So we're like cramming showings into these properties between guests. But this one in particular, I think just has ridiculous metrics. It has already proven revenue. So it did 163,000 in 2024, 126,000 in 2025. This year with World Cup coming to Dallas or to Houston, it's actually projected to do closer to $160,000. And that's what we've seen across Houston and DFW. It's been the gross income has mirrored more closely to 24 as compared to 2025. So I do think that we hit like a peak in revenue in 22, steady decline through 23, 24, and then into 2024, we had a little bit of a peak, and it was like kind of like this bouncy ride in terms of gross revenue. But I do think there's really nice opportunity to get into this one for about $160,000 in top line revenue, a very high cash on cash return play. Oh yeah, here you go. $160,000 expected. Cash on cash return at 20%. I talk about valuations in short-term rentals pretty often. Most of the time, if we can be under 6 times the gross income from that property, that's going to be a really good opportunity, a really nice entry, and we know it's going to be cash flow positive. This one is obviously trading well below that multiple. So at 735,000 with proven income already in place, all the furnishings convey. A good market, major urban core, big name brand attractions coming to the Houston market month after month after month. I do think this gives you an opportunity to get into a larger floor plan with proven revenue in good condition and be an out of the box slam dunk deal for any kind of short-term rental play, short-term rental investor. This is another one I'm surprised is still just sitting around, even though we've had a lot of activity on it. And that's the theme with all of these. Amarillo, 48 unit. I just posted this. I'm not super surprised this hasn't sold yet. It's a unique buyer who's going to buy something in Amarillo for $2.7 million. But the story behind this one is insane. If you give any weight to that 1% rule, meaning that you should be looking at 1% of the home value in terms of monthly income, and that's a good justification for like, are you in the realm of being cash flow positive? Is that in the realm of having the right amount of income based on the dollars that you're spending to acquire the asset? So this one in particular is $36,000 a month coming in, scheduled rental income. And I think the actual, the effective income that has been coming in is closer to about 32, which is still, even your effective income is well north of that 1% ratio, assuming a $2.7 million strike price. So this thing has been, I love this property for any commercial investor. And we've been doing a lot more commercial lately. So any of these commercial investors who want to get into something that would qualify for non-recourse debt, it's cash flow positive. I think the occupancy right now is over 90%, according to Crexy. And we do have the rent rolls in the OM on it, the offering memo, as well as the financials from the last 2 years. They've been really easy to get financials from, which I'm grateful for. That it's like sometimes it's like pulling teeth getting numbers from sellers, even though it's like, do you want us to sell this thing or not? We need some information. So this one has been easy to get information for. It's professionally run, professionally maintained, great occupancy history, obviously awesome income relative to the purchase price. I'm very surprised that this one hasn't at least had multiple people reaching out about getting the detailed financials. Maybe we've had 4 or 5 in the last week that have shown serious interest. But usually a property like this, I would expect it to pretty much move a day and a half after I post it. So this is a really cool opportunity. I think there's a ton of upside here as a raw cash generating vehicle for an investor. These off-market single-family houses down in Rasharon, I love this for any new investor or any risk-averse investor or any overseas investor because you have the management team already in place. You have a tenant who's already in place. You have proven cash flow that's already in place. You have an ongoing monthly maintenance plan that is already set up. So things that commonly happen, even if you buy a totally turnkey rental and you have the tenant in place, things that commonly happen are like just ongoing neglect that you as a primary homeowner wouldn't let happen to your home, but a tenant doesn't have the same vested interest in the asset quality as you as a primary homeowner. So it's very common to see things like HVAC filters just get absolutely caked. And then the life of your HVAC system goes from being, say, 15 years down to 5 because nobody's swapping out filters. Anybody who owns a rental property will 100% confirm that's the case. So you've got ongoing monthly maintenance. They go through, do things like pest control, front yard maintenance, backyard maintenance. They take care of the flower beds. They take care of swapping out filters, take care of making sure that fire extinguishers are placed and that your smoke detectors are placed. They do any kind of, what do you call it? Weed treatments around like your fence lines just to keep in accordance with the HOAs. So this, like when you go through this community and you look at one of the homes that is managed by Willow Asset Management, the management firm that takes care of this asset. If you look at any of those homes, they are in absolutely phenomenal condition. This property, the reason why I posted this one in particular is because I love the Drake floor plan. When I look at single family rentals, I'm looking for things that are single story, 4 bedrooms, about 1,800 square feet or so, because I found that appeals to the broadest tenant pool. A lot of tenants are nervous about stairs. Most tenants now, because of work from home culture, they need that 4th bedroom as an office if they don't already have a dedicated office space. So I love 4 bedrooms. I love single story. I love recent construction. I love it when there's already a tenant in place. And I love when I can find a professional management company, especially if my client is overseas. And if there's a 12-hour time gap between my client and the property that they own, it can be really nerve-wracking if you don't have a dialed-in management offering. So this one has all of that. And I'm surprised that this one hasn't moved yet because it has a tenant in place already paying $2,970 on a $309,000 purchase price on a 2023 build single-family asset in a great market with highly rated schools and very consistent rates of historic appreciation. So this property checks all of the boxes that a single family home investor looks for. I posted this on Tuesday or Wednesday. When did I post this? On the 21st. So I guess this went out 8 days ago. And I'm surprised that it hasn't moved. So keeping in theme, lots of traffic in terms of people visiting this page. Just no offers written yet. Lots of people scheduling Zoom calls and discussing the asset, but it just hasn't tipped over into offer territory. Last one on our live session today, the Caney duplex. This one is off market. It was brought to us by a developer who we've worked with on multiple properties. The tenant who's currently in place is an arbitrage tenant, Airbnb arbitrage tenant. It means that the current tenant, they have a master lease, they have a lease on both units actually, and they furnish the units, they cover all the utility expenses, they cover all of the landscaping, and they run each of these as an Airbnb. So there's a catch 22 to that. One, you are fully exposed to a single tenant. But two, that tenant is highly incentivized to keep your property in excellent condition because they are running a business. They want high reviews on their Airbnb. They're locked into a 2-year lease at $4,900 per month on a $475,000 strike price. So as long as you're okay with that key man risk, with that single tenant risk, this is a phenomenal opportunity. New construction, urban core, $4,900 per month lease already locked in, and a tenant who's highly incentivized to take care of this property, let nothing bad happen to it because they need those really high rated guest reviews on Airbnb. Even if you are an overseas or an out-of-state investor, I would still feel very comfortable suggesting this product to that end buyer because I think this is one that will take care of itself because you have another party who's as invested in the performance of the asset as you are. So there's good, there's bad to agreeing to an arbitrage style lease. I've only had positive experiences with them. That'll be up to you. But this one has had really nice engagement. Lots of people reaching out about it, but we just haven't tipped over into offer territory yet. So there you go. Let me know what you guys think. If you want more deals like this, I publish this deal distribution every Monday, Tuesday, Wednesday, Thursday, Friday, usually right around 7 a.m. And you can see the history, go through, scroll, and see deals that are interesting, and see what all the numbers look like. All the numbers that I post, they're verified. The income that I post on an Airbnb, those were pulled off of the actual Airbnb dashboards. We don't post an Airbnb unless we have the verified income. We don't post a duplex unless we can actually confirm that that unit had already leased for the value that we are reflecting, or we can show a really detailed set of rental comps that support the values that we're quoting. So it takes a lot of time. We only send out 3 to 4 options each day, and that's across the entire Texas market. So you're really getting the absolute cream of the crop in terms of deal suggestions that I send out each morning. So you can visit victorsteffen.com/daily-deals. You can visit the texasdeallist.beehive.com. I'll fix that URL eventually. It just hasn't been high on the priority list. Shoot a text, leave a DM, and we cannot wait to work with you soon.